Hey, good evening, everyone. Welcome to the Paytm Money Talk Show. And I'm Dr. Shivani Shirsat, your host for the day, a certified financial planner and edu coach with Paytm Wealth Academy, Paytm Money. So, guys, welcome once again. This is a beautiful platform where we help you understand and learn more about a lot of concepts on investing and taking the right investment decisions. Yeah. So today we're going to discuss a lot of important topics, especially how you can, diversify your money outside India. Isn't that something great, friends? Generally, what do? We invest for the future, right? And investment, everybody needs to do it. But typically, we are domestic centered. India में ही हमारे investments रहते हैं. But today the topic is, investing in global growth opportunities, and that too through mutual funds. So before we start this discussion, let me just introduce the format of the show. Okay, so what we do is we'll be inviting two very important guests today. Yes, you heard me right, two guests. One is going to be, both are from different domains. Yeah, one is from a social media celebrity. I'm sure you must be knowing him. And the other is a mutual fund manager, an expert in handling mutual funds, expert in handling your money. So, before we begin, I would like to tell you that this show is powered by Paytm Money. So, let the show begin, friends. Can we have the video? Hi, welcome back. Let's dive deep into this discussion. It's a very important and interesting topic of the day, how to invest our money outside India, right? So, to encash on that global growth opportunity, I have with us a very interesting guest here, and he's none other than Akshat Srivastav. I'm sure all of you must be knowing Akshat, right? But before we invite Akshat on, Akshat is definitely very passionate about his work, and if you read his bio, it says that he's an entrepreneur. But guys, I prefer to call him a passionpreneur because his passion is to share, to spread education, to make people more educated. Yeah, Akshat, I really, really love the work that you are doing. So let's welcome Akshat. Hi, Akshat. Can we have
Hi,
Akshat on stage?
hi, Shivani ji. Thank you so much for
Hi,
the lovely
hi.
introduction. Appreciate it. Thank you.
Actually, Akshat, I'm not doing justice to your, introduction. You have such beautiful qualifications.
That's
Your passion is
good.
actually something which is so important. So, yeah, if you could, do little justice and introduce yourself further.
Sure. So I've worked in wide range of domains, mostly centered around management consulting, and even there, my specialization was finance. So I started working. I've worked with top tier management consulting firms. Have an MBA from INSEAD. You know me from talking about finance on YouTube, so that's how some of our audiences would know me. I write quite a lot, right, on LinkedIn. I would term myself as a writer, right? So I write a lot. It's just that I happen to make videos, so people have loved and appreciated that. So yeah, so that's about me. From an investment viewpoint, I have been investing for the last 12 years, my own money, right? I'm not a registered investor per se, right? So just putting it out as a disclaimer, but I do tend to share whatever I'm doing in the market just from a research point of view, and hopefully whatever I'm saying through this chat, people will take it from as a research point for their own investment thesis.
Right, Rakshit. That's really great because there are very few people, who can pursue their passion and make it into a career, and you are one of them. So that's really, really wonderful. And I'm a big fan of yours. For last couple of years, I've been actually watching a lot of your videos. So we can move into the next segment, of Market Lens, and I would like to ask you a few questions, Akshat. You know that today there's a lot of confusion in the market, right? Retail investors are pretty confused with the volatility being so high. Markets are, quite unstable, political instability, interest rate hikes, and also, what is your take on the market, in the short and the medium term?
Right. So my short-term view, or rather the medium-term. Let me start with the long-term view first. Right. So the long-term view is that, as always, the markets are likely to go up for
Mm-hmm.
wide variety of reasons. They have always gone
Mm-hmm.
up. So
Yes.
unless we fundamentally stop believing in the fact that businesses are going to somewhat stop growing, there is
Right.
no need to be pessimistic about the markets from a long-term perspective.
Right. Right.
Now comes the mid-term and short-term perspective.
Mm-hmm.
So I would say that volatility was fairly high up until a
Mm-hmm.
couple of months ago, because no one really knew how the high interest rates would be factored in, how the inflation is being handled, bunch of
Correct.
other macroeconomic problems that were there. Those
Mm-hmm.
macro problems have somewhat been factored into the market already. So again, my mid-term view on the market is again quite optimistic. So that's it. From a short-term perspective, of course, no one can guess the price movement. There are macro issues, as you correctly pointed out, especially around China, the Chinese debt crisis. That is one looming issue. The China-Taiwan war, that is the second looming issue. Now, you and
Right.
I cannot predict what is going to, what Xi Jinping is going to do, or
Right.
what the situation from America would be. So there is hardly any point in terms of going there. So maybe there can be some short-term trigger points, but what I would paint is a very optimistic picture, simply because of the viewpoint that the world needs to grow. We don't have an option post 2020, but for the growth to pick up. Extremely important that there are not too many back-to-back crises, because we are addicted to growth, and there is no other way for the world to grow. Um, One of the things that happens is that the governments print money, and that allows the world to grow fast.
Oh,
And whatever the situation is, we have to grow. That's the simple viewpoint. A lot of elections are pending, right, both in India, abroad. So I personally do not see that how the incentives are misaligned for politicians, government leaders, and markets, right? So I see a very positive picture in midterm, long term, short term. We can't predict.
right. And I think India, being one of the fastest growing economies in the
Yeah.
world, there is a prediction that we're going to have a fairly robust projected growth, in the coming years. So do you think that we Indian investors, the retail investors, should use mutual funds, to capture this growth story?
Right. So India is growing, right, which is great news for all of us. I think India it has always been said that India is a fast-growing economy. It's only a matter of time when we really accelerate the growth, right? So no one is doubting India's growth capabilities per se. So that's
True,
point one.
true, true.
Point two is that what changes, right? Because basically for the markets to grow, because India will grow, that's one part of the equation. But would that lead for the markets to grow, right? Because
Right.
for that to happen, a lot of money needs to come to the market, right? And
Right.
that will only happen when discretionary income is there with people. So the good data point here is that we are likely to grow from 2000 US dollars to 4000 US dollars. That's what everyone tells us, which will bring discretionary income into the mix. There is a lot of somewhat, right, more awareness with retail investors in terms of the benefits of investing in the
Right.
stock market. So some of the people from my generation have stopped buying houses, etc., and that money is coming to the stock market. So those are positive developments from India, right? So I'm more excited about these points rather than the overall sort of the economic output, etc. So this is one. Second point is that that should retail investors go via the mutual fund route? It really depends on your level of expertise. If you are starting out, then yes, mutual funds are a great investment instrument. If you are involved in your full-time job and you don't have time to do individual stock market analysis, research,
True.
keep a track of companies, then yes, by default, mutual fund is your go-to option.
This also holds true, right, when we talk about diversification, because mutual fund is that one tool which gives you a ready-made diversified portfolio, doesn't it? Because
Right?
if I were to look at just investing into one asset class, maybe fixed deposits or direct equity,
Mhm.
then wouldn't it make my portfolio a little bit more over concentrated into just one asset class?
Yeah.
And with so that's what I was thinking. Maybe because of that one reason, diversification, mutual fund definitely offers a good tool for all of us.
Definitely, I would say that it's a convenient tool, right, more than anything else. Because even when I speak with investors, I get a lot of messages. One of the key things that I keep on advocating, even on my YouTube, is fairly simple: that please be diversified, diversify across asset classes, diversify across sectors, and diversify across stocks as well. So,
Right.
if you're picking stocks as an asset class in which you are going to invest, then either create a diversified portfolio yourself. Don't just concentrate your money in one single portfolio or one single stock.
Right.
If you're going to the mutual fund route, then yes, automatically your portfolio gets diversified in the stock as an asset class.
Yeah, so speaking about diversification, one level, of diversification is international diversification or diversifying across geographies, right? That's the topic of discussion today, basically. So, how do you look at that? How should an Indian investor approach investing outside India? What is available to him?
So point number one is that should Indian investors diversify outside India? I would say an emphatic yes, that you definitely should. The reason there is
Mhm.
fairly simple: that if you study the portfolios of any big investors, they hedge their sovereign risk, right? Because if you're only getting exposure to one economy, and if something bad happens to your 100% portfolio, that's bad, right? So you should at least have some bit of money outside India. That's what I would say. I am personally 25% outside India, right? And 75% in India. Why 75% in India? Because I'm an Indian, right? So it's easier for me to manage my money in India. So therefore, I put majority of my money in India. And 25% money is outside India from a hedging perspective. So this is one that Indians should definitely explore. Second is that when you're investing outside India, you get access to certain opportunities that you will not get in India. A classic case in point is that if you are a tech enthusiast, if you are reading about how tech companies are evolving, or what 5 years down the line, which would be the five biggest tech companies, I would say that despite all the growth in India, we would have a hard time saying that, some Indian company is going to beat the top five players in the US,
Mhm.
in tech, right?
Mhm.
So
Mhm.
if you are exploring those type of options, then by default you have to go outside India. So it depends on your investment thesis, but definitely I would recommend people to learn more about investing outside India and take some exposure from a diversification point of view.
Right, right, wonderful. So, if we were to look at diversifying through mutual funds, then one fund that comes to mind is, Access Growth Opportunities Fund. And what's your take on this fund? Before we actually invite our next guest, an expert who is from Access AMC, what is your take on this, Akshat?
Honestly, like, I mean, there is no like right or wrong review, right, of anything. It's like me asking you that, hey, do you like kadai paneer, right? So you might say yes, right, and I might or might not like it. It really depends on our own appetite, what we like, what we don't like, what our other part of the portfolio is.
Right, right.
Good part is that it gives you international exposure, right, which
Exposure.
is nice, right? It's a growth fund, right? So from that angle, it allows you to compound your wealth. So positives, right? But again, it needs to be seen in context of your entire portfolio, right? So that's what I would say, right? I would not, and definitely, right, there is a risk profile of the fund. So please go and study individual assets, see if it makes sense, right? Understand the investment philosophy, and hopefully through our guests, we'll be able to understand more
Yeah,
what the
exactly. That's
investment
what it's.
philosophy of the fund is.
Yeah, so let's welcome our next guest, Mr. Shane Was. Uh, let him also join us for this discussion. Before Mr. Shane joins in, let me introduce him a little bit. He is AVP Products at Axis AMC, and he holds his management degree from uh, Grenoble Graduate Business School, and he's actually looking after mutual funds, alternate investment funds, PMS, and ETFs at Axis Mutual Funds. So, welcome, Shane. Please join us.
Hi, Shivani.
Hi,
Glad
Shane.
to be
How are
here.
you?
Good. How are you?
I'm good. It's really nice to share the screen with you, Shane. It's really wonderful, to meet fund managers like you. Can you introduce yourself a little bit more? It was a very brief that I have given about
Yeah,
you. So if you would like to,
yeah.
yeah, please.
Thanks for that. So I'm actually not part of the fund management team. So I'm
Oh,
more from the product side at Axis Mutual Fund. The product team is basically the brains trust that looks after the product itself that you see on your screens and what you invest in. And we look after creating new ideas and new innovative products for
Hmm.
investors looking at what the market conditions are. We liaise a
Hmm.
lot with fund managers, market experts, and of course customers to
Hmm.
kind of identify ideal solutions for them. So that's a little bit about what we do at Axis as well, and the product team in general.
Great, great. So, if you could, we were just Akshat and me. We have another guest, as you know. Akshat is also here
Yeah.
with us, and we were discussing a little bit about investing outside India. Because that's now a level of diversification that people need to actually explore. So,
Yeah.
we were talking about Axis Growth Opportunities Fund. So, who better than you to, talk to the viewers about that? So, if you could just, run the PPT and explain it to them.
Sure, sure, sure. So just to give a little bit background about this fund was launched about 4 5 years ago, almost to the date almost. And what the objective of this fund is to try and identify opportunities, blending both domestic stocks and international stocks. So this fund falls under the large and mid cap category as per the SEBI circular. And Typically we try and work with about 70% domestic and the rest in international stocks. I think Akshat alluded to a lot of what I was going to say, so I'll keep it very brief. Basically, if you were to look at how the Indian markets are, and in the context of the global markets, we just account for about 3% of the total market cap from an equity standpoint of view, which is very tiny if you look at things, right? So if you are a global investor and you have global aspirations, you spend and interact with companies across the globe, your portfolio also should be fairly diversified in the way you kind of spend it. So if you were to look at it today, the US accounts for about 40% of the global market. uh, China accounts for another 14%. Europe accounts for about 6 7 8%, and Japan about another 7%. So what you've got is a very very diversified basket of geographies that you should look at participating in. And as Indian investors, obviously we are relatively smaller scale investors because we are a developing economy after all, and we are only just about taking our baby steps into investing in equities. So with the mutual fund Sahi Hai campaign, our endeavor to get investors into the equity markets has been very very successful. And now obviously the next step is to kind of get them introduced to the wider equity market universe. As you see on the next slide, and what Akshat was alluding to earlier as well, is that if you were to participate globally, you don't want to get bogged down by one or two countries. So taking a global exposure is a more widely accepted investment thesis, and gives you the adequate amount of diversification and all of those attributes that you're looking for during your asset allocation and the portfolio construction. What this also does is, and you look at this on the next slide, is that it gives you access to companies and segments of the market which are more sunrise in nature. So you are always looking for the next best investment idea, and many of those ideas unfortunately are outside India, even though we are known as a high growth, high on development, and very very innovative populace. A lot of the innovation actually is happening offshore, and to capture those you have to have that ability in your portfolio to participate in overseas markets. So your consumer names, your e-commerce names are all products that you actually consume locally in India. But if you have to actually participate in them from an investment standpoint, you've got to be investing internationally. And the fund that we're talking about does exactly that. If you go to the next slide, who's looking at? Yeah, next slide, please. Uh, if you were looking at where we stand today, uh, the given that India is an emerging market, uh, when you participate in the global market, you are getting twin benefits of diversification. By diversification, you also get an added benefit of lower correlation. So, what do you mean by lower correlation? So, when you're building a portfolio, you want stability of returns, you want stability of risk. You want to have a more defined exposure and defined return profile, and international investing does just that. So a few global events over the last 20-25 years shows you how the world market has performed, say, vis-a-vis the Indian market. So there are times when the Indian market does well, as we are doing currently. There are times when the global market would tend to outperform the Indian market. So by participating or adding some degree of allocation, now how much to put is a prerogative that you or your financial advisor is best suited to advise you on. But the general concept or general idea is that as you participate internationally, you are in a position to kind of manage your risks in a more seamless manner. Next. Yeah. So the fund basically is managed domestically. We, however, are not experts in managing international money. So we've got our JV partner, who's Schroders. Schroders is one of the oldest and largest active asset managers in the world. So if you were to look at their potential, so they manage in excess of about $900 billion across active schemes, and hence, given that they are investors in Access AMC as a company itself, it makes us very, it gives us a lot of confidence to partner with them in kind of offering retail solutions to investors in India. The entire product is basically executed in-house. So we have key intermediaries like brokers, custody agents, and all of that across most major markets. And the investing style is very similar to what we have domestically. So Schroders and us have got very similar growth styles, and that helps us piggyback of an offering that is very similar, and we are very comfortable in offering that kind of a solution to you. So that's it about the fund. Shivani, if you want to take that forward from here on. Shivani, I think your voice is not audible.
Sorry, yeah, it was on mute. So that's really important. Now our viewers have a better understanding of the fund and how it actually performs. But there is a few questions that I would like to ask you. But before that, I think I will let Akshat do the privilege. So Akshat could join us, and Akshat, if you have some questions, if you could ask Shane, and then I could come back and ask him few more, unless our
Yeah,
viewers also have some.
right, absolutely. So
Yeah.
Shane, thanks for the presentation. I got a better sense. Now, how are you like managing the risk for this fund? Is there any hedging that you're doing? If you can speak specifically about that.
Yeah, sure. So the fund is a long only fund. So what do I mean by that is just like how you would buy stocks in your direct portfolio, the fund itself buys funds across the world. So as it stands today, we have exposure to about 75, 80 names, out of which about 50 names are overseas, and they cover about 15 countries. The objective here is to give investors a flavor of the international pie.
Correct.
Obviously, a defined allocation is very critical, like you mentioned in your opening statements, Akshat. So
Mhm.
the fund does not do any sort of hedging. The fund is to give you that exposure the way you want it, and
Mhm.
how you participate is in the fund has a bearing on your overall portfolio towards your international allocation.
All right. And what precisely would be the churn rate? For example, if you create a portfolio of, let's say, 500 stocks on it,
Yeah.
then have you decided how you're going to churn the stocks? Is it a buy and hold strategy, or are you going to churn it frequently? Any
Yeah.
investment thesis there?
Sure. So in terms of the way the portfolio is constructed, we don't target to invest in 500 names. Uh, uh, the portfolio is very concentrated, given that you're covering almost 19,000 stocks globally.
All
A
right.
portfolio of about 75, 80 names
Mhm.
is very concentrated and prudent. Uh, Over diversification is not something that we at Access are comfortable with. So we are investors who are very high conviction investors, and the
Mhm.
portfolios that and by extension, because we want to reiterate our conviction, we typically tend to run a very low churn portfolio. So you would typically see our portfolios holding ideas that we like for anywhere between 3 to 5 years. Of course, we do occasionally take that trading call as and when that opportunity arises. But as long-term investors participating in the fund, we don't really want to, be very, very opportunistic in that way.
Right. So, from a investment thesis viewpoint, what are some of the top sectors in which you are taking more exposure in, and is it going to stay intact going forward as well?
Yeah, so we are very bottom up fund managers in general. So we don't take sectoral views. We rather look at companies. We identify companies basis our investment framework. We are very quality centric in nature. So companies that have strong balance sheets, a strong management pedigree, a lot of free cash flow, profitable in nature. Those are the type of companies that we typically try to participate in. And by virtue of this fund being a large and mid cap strategy, we typically tend to identify companies in a fairly early stage of their growth and try to capitalize on their growth potential. So to cut to in summary, basically, you've got a high conviction portfolio, you've got a very high quality centric portfolio, and we play that for a meaningfully long period of time.
Understood. And from a investor viewpoint, what is the investor profile for whom this fund might be more suitable?
The investor profile is exactly as you would have put it earlier. So for investors who are looking to uh, dip their toes into international investing, get a flavor of that, and who has so the Access Growth Opportunities Fund will never be your first fund. It will be a fund wherein you have already got a flavor of mutual fund understanding. So either with a tax saver or an ELSS type of fund, or a large cap fund, and then you would try to diversify your portfolio and build a more concretized portfolio for growth and wealth creation. That is the fund that Access Growth Opportunities aims to be.
Got it. Awesome. So I think we should bring Shivani ji in if she has any questions.
Yeah. Yes, I just have a couple of questions actually. Now, this is equity where, it's a large and a mid cap fund, like you said, where you have good quality equity, right, from US and other international countries, right? So, what about the taxation, Shane? How is the
Yeah.
gains from this fund taxed, basically?
Yeah. Very, very pertinent question for viewers, because if you were to look at a standalone international fund,
Hmm.
given the way the income tax rules and the act is structured,
Hmm.
international funds or international stocks are treated at par with debt. But
Yeah.
the way the fund is constructed, we typically invest more than 65% in Indian equities.
Hmm.
So by extension, that fund is treated like an equity fund. So in a sense, you're getting some degree or a toehold into global markets without the ills of that taxation, the debt taxation.
Right, so that makes it a better option, I think, than just investing into the other fund of funds, or ETFs, where it wouldn't be
Yes,
taxed as equity. So you're getting the equity benefit out here. So
correct,
that's
correct.
wonderful. Do we have some questions? I think our viewers are also posting some questions. Can we have those questions, please? Yeah, so we have a couple of questions here. Vivek Kumar says, how do you identify global growth opportunities, like any tools or anything to look for, as we can't go read daily news?
Of course. So like I mentioned in my opening remarks, we have tied up with Schroders. Schroders is an international global fund house, and they basically provide us an advisory on their stocks. So the Schroders team is based out of London, and they cover in excess of about 15,000 stocks across the world, and they cherry pick ideas which are then fed to us, and we then participate in many of these stories. So there's a dedicated team of about 4,000 investment analysts who cover this entire range of stocks. So it's a very well thought out process at the back end, and the endeavor is to kind of give you a very concise investment solution through this
Okay.
fund.
Okay, so one question that comes to mind also is, okay, we'll take this question of Natasha Ali here first. She says, Shane sir, is recession coming now? It's a very generic question.
Well, for the rest of the world, yeah, the polls and market participants are pricing in a very very sharp recession. You just have the U.S. Fed meeting at Jackson Hole. Over the next few days, you will get a very very good picture of what's happening in the U.S. markets. But for Indians, especially, the recession fear is far less likely, and two reasons for that. Today you've got demand firing on all cylinders. You've also got companies investing in capex. This has not happened since 2015, so that's a really bullish sign that there is a lot of latent demand in the economy. There is a lot of self sustenance that is happening in the economy, and that gives us a lot of confidence that investing domestically makes a lot of sense at this point in time. So to your answer, Natasha, recession in India is very unlikely at this point, but globally, yes, there are fears that there will be recession. But from let's look at it this way: the last time recession happened in 2008. From there, you had the offshoots like a Netflix or an Alibaba come out and make billions of dollars for investors. So investing in recessions is probably one of the best times for you as an investor.
Right. Anjali says, instead of one international mutual fund and one domestic fund, can I invest only in this fund?
Yes, that's the general idea, isn't it? The idea is to give you a one-stop solution to participate in this in the
Anything,
entire equity universe.
right? Anything you want to add to this, Akshat?
So again, going back to the central thesis, that it really depends how you're constructing your portfolio, right? Because you might already have exposure to other mutual funds. Maybe you would have purchased other global international funds. So you need to see how this particular mutual fund fits with your overall investment portfolio. So please add that to the entire conversation.
Of course, that's well said, Akshat.
Absolutely. Okay. Recently, India is growing, so how it will impact in global options? What are the best options to invest considering this fact? Shiva Subramaniam has asked this question. Yes, Shiva.
Okay. So you're always going to see a situation wherein one segment of the market will do better than the others. So as an investor who may be new to investing or is not attuned to international markets or global markets, uh, investors who are more comfortable with identifying mutual funds domestically could use products like this. So we don't only have one fund. We've got about 65 funds that we kind of run across various asset classes. And if you are able to identify a handful of products that meet your portfolio requirements, you will be in a position to capture the bests of each segment of the market as and when the time arises. So uh, I would refrain from saying that invest in one type of fund today, then switch to another fund. Many a times investors are not in a position to do that because they don't have the time or the research capabilities to do so. So identify a broad market fund and leave that small, the nuances to a fund manager who is more attuned with the market rather than you going in blind. Going in blind is probably one of the worst things that an investor could do today.
Okay, just before we take another question, I had a question in mind. What would be the best route of investing here? Would it be good to put in a lump sum, or an SIP route would be fairly more beneficial?
Yeah, so if you've got a lot of money stashed around under the mattress or in the bank, maybe a lump sum option could work for you. And typically, lump sum is linked more towards timing the market. And as we all know, and we've learned from the past as well, that timing the market does not always work in the favor of investors. So we have solutions like systematic plans. We've got systematic investment plans, which everyone's familiar with, SIPs. For investors who've got corpuses, large corpuses just idling around, they could use systematic transfer plans or systematic other systematic plans to kind of participate as and when, in a more gradual approach. So it is not only lump sum or SIP. There are a whole host of solutions that today mutual funds and financial service providers offer, which you could use to kind of enter the market in a more structured manner.
Great. So we could just continue with the other questions from the viewers. Yes, this is from Natasha. How does the fund balance global and domestic opportunities? What is the preference given here?
Yeah. So the fund by nature is a domestic centric fund. So in excess of 65% will always be in domestic stocks. The international portion. So there is a twist to this international portion. So in early 2020, SEBI we across all mutual funds, so we've got an international limit of about $7 billion, and that limit was hit because of a lot of investors piling on to products like this. And subsequently, mutual funds have not been permitted to invest incrementally into international markets. So as it stands today, the fund has the potential to invest up to 35% in global equity markets. However, we since that limit being hit, we've not been able to incrementally invest in the international market. So any flows that we get today are invested in the domestic markets itself. For investors as a whole, by virtue of you participating in the Axis Growth Opportunities Fund, you are by extension getting exposure to the international markets, not at the same rate at 35%, but marginally lower amount. But yes,
Right.
so today as it stands, it's skewed towards domestic opportunities.
Since there is international exposure, so obviously, as an investor, do we need to watch out for currency risk? Is it going to be impactful here, or the fund manager takes care of all that?
No, so by virtue of you investing in the overseas market, you are effectively dollarizing your investments, or euroizing your investments. So basically, no longer you are no longer investing in Indian rupees. Uh, what that aids us so far, because India is a developing economy, and the way the terms of trade work is India's currency typically tends to depreciate about 4 or 5% annually. Now, this obviously does not happen, in a straight line, and you more often see it in a more staggered approach. So over the last 6 months, for example, the Indian currency dropped about 7%, but for the last 3 or 4 years, the Indian currency did not move at all. So if you were to look at those all things taken, the when you invest internationally, you do get the benefit of the currency fluctuations as and when they happen. Given that India's currency depreciates more often than not, you get that additional benefit.
Great. Yes, can we have a few more questions? We still have time. Another couple of minutes. Yes, we can. Tanish is asking us the same thing. Almost challenges faced in the global economy we should be aware of.
So I think you've got the Russia tension that continues to persist. It's very geopolitical in nature, so markets are on tenterhooks. A lot of the risks have already been priced in. So in an environment where you've got a lot of pain, uh, that could come because of inflation or because of war and all of those things. Today, investors are better suited of investing in the markets as they were probably maybe 12, 18 months ago. So war is the only major thing. Tomorrow, if you have the China war, China going and invading Taiwan, or you've got an escalation in geopolitical risks globally, that is something that the markets have obviously not seen, and hopefully that does not happen. So I think at this point, the geopolitical tensions are the only downers or risk factor that we should be worried about.
Anything you
Akshat,
would like
you
to
want to
add,
add
Akshat?
something?
Yeah, that's what I was asking, Akshat.
Right. So, challenges faced in the global economy. So, multiple things, right? So, one is, of course, the inflation at what rate it is going to come down. Everyone is trying their level best. It seems to be in control. Markets have already factored in. That's one. Russia-Ukraine crisis, as Shane just spoke about. There is China-Taiwan issue, which is evolving as we speak. Countries going bankrupt, right? For example, Pakistan, Sri Lanka, that is playing out really badly. That also has implications for a country like India, which has borders, right, with all these countries. Uh, I would say employment rate, right? That is again a very unemployment employment rate. That again becomes a very prominent factor because right now it seems that, at least from an employment cycle perspective, we are throttling at full speed, right? Which is good for the economy. Shane was earlier pointing out that a lot of capital investment has started happening. Last time it played out was in 2015, so which is good news. But yeah, I think these are broad factors that you should always look at. Inflation being the primary one that we should be on a lookout.
Right. Kevin D'Souza is, asking you a question. Does the fund buy individual US single stocks or does it buy ADRs in order to give individuals exposure to these companies?
Sure, sure. So we do buy US single stocks. We do buy ADRs. We also buy stocks in other regions. So if you look at our portfolios, we've got exposure in Brazil, we've got exposure in Australia, we've got exposure in Japan. So you name it. So we've got about 15 countries where companies are domiciled, or the funds, the stocks are listed. It's a very broad spectrum of investments that we do. But to your point, yes, Kevin, we do participate across the length and breadth of global equities.
Great. So that brings us. Okay. So we do not have this one more. I think question Ashwath Narayan is asking. Could we have that question back, please? Uh, okay. Yeah, this is for Akshat actually. Akshat, when you are able to move your investment basis market condition, is it wise to retail investors to keep shifting his mutual fund basis NAV movement?
So, Ashwat, basically the mutual fund itself tells you, right? So, if you go and read the document, there is an investment thesis that any mutual fund gives out. They will categorically tell you that, hey, invest in our mutual fund if you have this much of time horizon. So, majority of those mutual funds will tell you that, hey, invest in us only when you have 2 to 3 years or 3 to 5 years or 7 years plus. So, please follow that, right? Because your investments are being done keeping that investment thesis in mind by the mutual fund manager. If you're investing in a mutual fund manager where the manager himself or herself is telling you that, hey, invest for at least 5 years, and you are rotating the money, then it's not sensible. If you want to take some swing trades, right, in Nifty, then buy Nifty ETF or Nifty mutual funds, right, index based. Those are more sensible compared to doing like swing trading in these type of mutual funds.
Great. I think we have just time enough for that last question. So, to wrap it up, I mean, it's really, really wonderful to have both of you here today. It's really been a pleasure, Akshat and Shane, to have you on stage here today. And I'm sure all our viewers have enjoyed and understood a lot of things about international investing and how they could, encash this opportunity of the global opportunities that is available there. So, to wrap it up, friends, what I can say is invest you must, but do it wisely. Use your discretion and plan your goals, and then select a fund or any investment that you're looking at. So happy investing, friends. A lot of wise understanding. I'm sure Paytm has been successful in delivering what we have wanting to do is to spread financial education to everybody around here. So great. Thank you for coming, Akshat. Thank you for coming, Shane. Thank you,
My
viewers,
pleasure.
for joining us. And let's hope we meet again sometime. Yeah. Bye bye. Bye. Thank you.
Bye bye.